Hello, this is Mike Swanson, Wall Street Window, and today I'm speaking with a very special guest I haven't spoke with in well over a year, and that's Jordan Roy-Byrne, who runs the website thedailygold.com and the YouTube channel of the same name. How you doing today, Jordan?
Hey, Mike, I'm great. It's great to be back with you, and thanks for having me on.
Oh, certainly. Well, you're not someone who just got into the gold and silver trend, and you're not someone that's a perma bull either, because there have been years where you've been bearish and very cautious. And last year, silver cleared the $26 an ounce level, and gold took off. And it's been great years. I mean, they're up about more than anything else in the markets this year. And silver made a new high last week, but there's some signs of I don't want to say trouble, but the recent action. The silver's made a new high, but gold and the mining stocks haven't yet cleared the highs they made in October. So, what's your take on what's going on?
Well, my take would be that there's strong similarities with respect to gold and silver to the early 70s. Gold is tracking 1972, 1973 really closely, and if you look at silver on one analog chart I use has been tracking that 72 to 74 move uh, relatively closely, not perfectly. So that's one thing is that we're following the 70s bull market. And so you in the 70s versus the 2000s, there were more explosive moves. And there's two reasons for that. The one reason is, or the first reason I should say is you had a secular bear market in bonds. So the bond market is bigger than the stock market. So you have a secular bear in bonds, which is a huge difference. So capital since 2022 has been coming out of bonds, moving into gold and now silver. The second reason is making new all-time highs early in the new secular bull market. So you look at gold, gold broke out in 1972, broke out from a 108-year-long base and just constantly made new highs throughout the 70s. Silver, it actually broke out. It made a modern new all-time high in 1967 at a huge move to 1968. And then after a cyclical bear, it broke out to new all-time highs in 1973. And so then you had another 6+ years for silver to make new highs. So those are the two reasons that we've seen more accelerated moves in gold and silver. And it's the two reasons why what we've seen is very similar to the 1970s. Now, silver is definitely stretched here. It's very overbought. But the issue with that, Mike, is in secular bull markets, you tend to get really overbought, and it happens a lot. And also, if you look at the 70s, the gold and silver were fairly overbought for most of the time, especially in the early 70s. So, silver has broken out of its 45-year long base at $50, which I think is probably the second greatest breakout of all time. I would put the greatest breakout of all time is the gold breakout that I mentioned earlier that we saw in 1972. And everything I'm looking at says that silver could double from that breakout in the next like 7 to 11 months based on the three other times it did that in history. So it's tough because if you're not fully invested yet and if you're not if you're brand new, it is tough for those reasons. It's difficult to jump in on a train that's already moving so fast. So in some respects, you do have to be careful. But with respect to me and my investing and what I teach in my service is, and this is something I've focused on a lot. I should say a lot more in the last couple of years. Focus on the companies, less on the macro. Focus on the companies, learn the companies, buy good companies. That's what I'm trying to do. Find good value, buy good, gold and silver junior companies, and you just buy and hold and let your gains run. And occasionally we'll trim and take some of that money off the table, rotate it into something else. And if something goes wrong and these stocks, you were to lose 25% of your money or something like, I would sell at that point. So that's how I'm thinking about these bull markets. I'm not trying to predict or anticipate every little wiggle and move. I mean, I do expect gold and silver. They're going to be much higher later this year, and which I mean next year, I should say. And so from here, maybe we have another 18 or 24 months in this cyclical bull. But yeah, with respect to the companies, for me, it's buy, hold, and trim. So I look at companies on an individual basis, and so some are way too overbought and too expensive, but there's still some good values out there that you can find. So that sums it up for me. I mean, we're going to move much higher, but focus on the companies, look at individual companies, buy value, and buy, hold, and trim.
Well, when you're speaking of individual companies, are you talking about the big cap mining companies like Barrick or Newmont, or smaller junior or even exploration stocks?
I would say in between because in my service I have a top 10 list, and all those companies which were well, they still are juniors, but you look at 2 years ago or even 3 years ago where their market caps were 70 million, 100 million, 300 million, 200. They were around those levels. But now my top 10 list, they're basically all at a billion market cap. I mean, there's one or two that are in the high 700s. So I'm looking at small companies per se, but not because if we're talking about the junior mining industry, and you're talking about juniors from that sense, uh, people when you say junior, they're thinking about okay, a small explorer that's like a 30 or 40 or 50 million market cap. So I'm less focused on those. There are some that I cover, and I do cover some explorers, Mike, but my focus has been mostly on developers and producers. Like I find the companies that are developing mines, advancing development projects to production, and also the companies that are in production and growing production. So that's mostly what I've been focused on. Less on the exploration side that are smaller, but I do cover some of those.
Yeah, I can attest to 20 years ago, and we had that bull cycle, that those kind of stocks or companies that you're speaking about, the ones developing a mine, or they tend to go up the most. At least they did on that cycle. And I'm not following that world as closely as you are. Let me ask you this about it, because I haven't even looked lately. I haven't. Um, these exploration ones, what are the typical market caps now? Because like in 2016, you could find them trading at a million or 2 million market cap, and in that 20 years ago cycle, they'd be at 25, 30 million a lot of times. Is that what you're seeing now?
Not as much, not as much. I think that probably if you go back to, I want to say around the summer, the late spring, the early summer, I think there were, that was probably like the last chance to get in, I think, on the ground floor of like juniors that actually had some value. They had ounces in the ground, or, um, they may have had a PEA or a pre-feasibility study or something like that. I'm just pulling up GDXJ as we're talking. Yes, I remember because I'm looking at the chart. So GDXJ made a bottom at the end of July, very beginning of August, and I think at that point there were so many juniors with especially the ones that actually they had lots of ounces, but they were still like really cheap as far as their valuations. And like these projects were not total garbage. Like maybe they were not the top of the tier, but they were okay or slightly above average. Those stocks have completely taken. I'm thinking about market caps that were 70 million, 80 million, 100 million, 200 million, 150, 300. Like those, a lot of the companies that were in that basket at the end of July, they've just completely taken off from that point and made, some of them have made 5x, 7x moves. And so I bring this up because after all those companies have moved, you're asking about the ones that are even a tier lower than that, and maybe they haven't defined a resource yet, or maybe they have a really small resource. I just I don't think you can find those for below 50 million right now.
Oh wow. So
So yeah. I mean, we've seen inflation across the board. With share structures. Like I remember 20 years ago, 15 years ago, and I remember thinking like, oh, 170 million or 220 million share. Like that's a terrible, awful share structure. And now we see companies with 500 million shares out, 450 million shares out. There's really good companies, really good juniors that have 250 or 300 million shares out. So it's inflation across the board. But yeah, to get back to what you're asking, I don't think you can find for the companies that are under 50 million market caps. There's probably just too many flaws with those companies. I think it's at this point it's going to be really hard to find something that has like a decent resource on the ground or a defined value. Now, with that being said, some of those companies, they'll drill, find ounces, make a discovery. They can get to that point where they're a lot more valuable and they can make their early shareholders huge money. But, there's more gambling involved when you're looking at those companies. It's a lot more difficult.
sure, that makes sense. Well, the thing about the 20 years ago thing is gold was at a much lower price, and so was silver than it is now. And the higher those two go up, the more these companies are worth anyway. I know you got to go to another meeting in a few minutes, so uh, just let you ask you real quick. Where could people get more information from you, and what do you offer?
They can go to thedailygold.com. They can get my book. You can download my book for free. It is about a year old, but it's still relevant. And check out my YouTube channel. I also have a playlist going over every chapter of the book on my YouTube channel. So, if you don't like to read, you can watch the videos on my YouTube channel. And I just in two or three videos, I give a history of gold stocks and the juniors, some criteria I look for. So those are the things that I think listeners, if they're just new to this, that they could benefit from. And I would just if you're new, just be very careful. You can make lots of money in these stocks, but you can also lose lots of money. So that's how you have to approach it. Be careful. Be skeptical of what you hear, and have a plan for making money and then keeping the money.
Sounds good. Well, thanks for taking the time out of your busy schedule to talk with all of us, and have a happy rest of the year.
You too, Mike. Thanks so much for having me.